Good morning, everybody. Today is Wednesday, September 4th. It's live Q&A. This is Amanda, and we're still working our vocab quiz. So how this works, you guys, is I'm going to read the questions aloud, and then I just would like you to type your answer choice into the chat for me, A, B, C, or D. If you're not sure, just take a stab at it. And for those of you that are just starting in your course, this may feel like too much for you, too much too soon, but that's okay. Just sit back and listen, and you'll be surprised how much you're going to pick up just by listening in, okay? All right, so let's get started. 61. What is a type of loan in which during the lifetime of the loan, payments are made in equal installments, so your payment amount is consistent throughout the entire loan? Okay, so let's say, for example, it's $1,200. So every month you're going to pay $1,200. And at the end of the loan term, the principal balance is zero, meaning the loan is paid in full on the final payment. So you're going to make this payment throughout the lifetime of the loan. It's always going to be the same dollar amount. And also something else that's important about these loans is this $1,200 is going to contain a portion for the principal and a portion for the interest. So you are fully killing off this loan, fully killing it off. So it would be a $1,200 P&I payment, principal and interest. All right. That is A, that's what we call a fully amortized loan. Fully amortized loan. So the word amort, the root word here is amort, and amort is a word that has French origins. It's kind of related to death. So I always tell students, thinking about you're fully killing off, you're fully unaliving. I guess that's the word everyone uses now, right? You're fully unaliving that debt. You're fully killing off that debt when you make those payments, right? So then a non-amortized loan, if you think about it in the terms like that, you're fully paying off that loan. Non-amortized means you're not fully paying it off, right? So non-amortized isn't just another way to say interest only. Interest only. Oh gosh, I can't even, I need more coffee. That's an interest only loan this morning. Interest only loan. All right. Where you're going to have, and normally with an interest only loan, you have that large balloon payment at the end. And partially amortizing, you're paying a little bit of principal and a little bit of interest. And at the end, you're still going to have that large balloon payment. All right. Let me get a sip of coffee because I think I need it. All right, 62. What is a formal document that identifies the lessor, the lessee, and the leased property, stating the terms, rent amount, and other details? What is a formal document that identifies the lessor, the lessee, and the leased property, stating the terms, rent amount, and other details? What do we call that? That is called that's a lease contract. Okay, and don't forget lessor, that's another word for landlord, right? The owner of the property, typically the landlord. The lessee, that is the renter. That is the renter. Number 63, what is the percentage of all available units that are unoccupied at a particular time? What is the percentage of all available units that are unoccupied at a particular time? Unoccupied. So how many units do you have available that are open and unrented. That would be your A, vacancy rate. Vacancy rate, okay? So what would be the opposite of a vacancy rate? Vacancy rate is unoccupied. So what would be a rate that shows the percentage of units that are occupied? That would be the opposite. That would be your occupancy rate. Very good. Number 64. What is maintenance performed on the property that preserves the physical building and helps eliminate costly problems? That should have an S on the end. Problems. What's that called? That is called B, preventive maintenance, because you're trying to prevent problems. Preventive maintenance. An example of that would be like changing the air filters. Changing the air filters on an HVAC unit. I know when I rented a duplex one time, every month they would bring an air filter. They would drop off an air filter. And then they would always offer to switch out the air filter for me. But I think they were doing it just to see how well you were keeping up the place. 65. What is one whom trust and confidence has been placed and is expected to be extremely loyal to the client? Now, choose the best answer here. Choose the best answer here. Choose the best answer here. And I probably should fix this, right? Because I know you guys are going to argue with me about this one. All right. Now, I'm going to say it's a fiduciary. But it's also Michelle. See, Michelle's really smart. She's hedging her bets there. You could say A. You also could argue A, right? Because when you become someone's agent, you also become their fiduciary. And you have those fiduciary responsibilities, right? And we remember those fiduciary responsibilities with the acronym called AC. Cold AC or A cold or old car. All right. Nola says yes, but only one answer on the state exam. Yeah, Nola, I don't think they're gonna put it to you like this. I think they would have one clear answer on the state exam. Yeah, she's got a point. Okay, so guys, what is our fiduciary responsibilities are known as cold AC. What does cold AC stand for? So what is C? What's our first C? Confidentiality. Yeah, we got to know how to keep our mouths closed, right? All right. What is O? O would be obedience. Yes, we have to follow all legal instructions. What is L? Loyalty. Yes, we got to be loyal to our clients, putting their needs above everyone else's, including our own. What is D? Disclosure. That's right. We have to tell them things that they need to know, even if it might kill the deal. What is A? Accountability. So we've got to take care with everything that they give us. And this is especially important right now. We live in a world of identity theft, right? So if somebody gives us a copy of a check or a copy of their driver's license, we need to protect that. And what is the last one? C is for care. We have to exercise reasonable skill and care. We have to take care of them. Okay. Very good. Good job, guys. Those are your fiduciary responsibilities to your client. Excellent work. 66, what is the type of lease in which the lessee pays base rent and utilities plus 2 other related expenses? So this is used in commercial a lot. That is C. That would be our double net lease. Okay. Double net lease. Good morning, Joe. Jess says, good morning, everyone. Is this the handout from last week? Yes. Yes, Joe. It's the same vocab exam. We're still doing vocab exam number 3. Mixed topics right here. So yes, ma'am. It's the same one. You're welcome, sweetie. All right. Number 67. Who is the borrower that holds equitable title in a deed of trust loan? Who is the borrower that holds equitable title in a deed of trust loan? Oh, this is a good question. We spent some time talking about this one. Now remember, a deed of trust is a type of security instrument for a mortgage loan. It's a 3-party instrument. Okay, so let's talk about these 3 parties here. All right, so let's say this is the person who borrowed the money. All right, here's our borrower. Okay. And so this is our borrower. And then we've got the lender. So let's say this is the lender right here. All right, here's our lender. And then we've got our another 3rd-party trustee over here. He looks like Guile from Street Fighter. All right, so our lender is called the beneficiary. They're benefiting from the loan. Beneficiary. All right. So the question is, what do we call the borrower? The borrower is actually called the trustor. The trustor. The 3rd party that's going to hold bare title while the payments are being made, that person is called the trustee. Trustee, they're a neutral 3rd party that's going to hold bare title while the payments are being made. The borrower is called the trustor. They're going to hold equitable title while the payments are being made. So the answer was A. Okay. I'll give you guys an easy way to remember it. Trustor has OR in it, right? It ends with OR. Borrower has OR. That's how I remember it. Okay. So the borrower is the trustor, the trustee is the 3rd party, and the lender is just called a beneficiary. Okay. All right. Number 68. What is a report based on recently sold properties, properties currently on the market, and expired listings that's normally completed by a real estate agent. What do we call that? And we typically do it for free. What is that? That's a D. That's a CMA, comparative market analysis. That's a CMA. Very good. What's the report that's done by a licensed and certified appraiser that's ordered by a lender to determine the value of the loan? That's A, right? Yes. Okay, now Rajneet asks for what is a BPO, a broker price opinion. This is also called a BPO. Rajneet, this is an opinion of the price, and it's normally, these are normally used in commercial. You don't see these in residential. They're used in commercial. So what happens, Rajneet, is commercial properties are sometimes hard to determine the value of them because a lot of times it's based on rent and it's really based on the market. So, and commercial really, really varies wildly per market. So if you are looking to buy a property in another area that you're not familiar with, Rajneet, and it's a commercial property, you might call up a broker, a commercial broker in that area, and ask them for their opinion of the value of the property, because they would have more insight into it. It's a way to get an idea about the value without having to do a formal appraisal. It's called a broker's price opinion. So you normally pay them to do it, about $250, $300. And the local broker will go there and take pictures of the property and ask about the rent and just kind of form their idea about how much they think the property is worth. It's called a BPO. Now, it cannot be used in replace of an appraisal, though. It cannot replace an actual official appraisal, but it's a good idea to get someone's opinion about the price, what that property would most likely sell for. Does that make sense, Rajneet? You're welcome, sweetie. Yeah, it's called a BPO. I helped my broker do one of those when I first got my license. We were asked to do a BPO on a shopping center here. Number 69. What is a percentage that indicates how quickly an investor will regain the amount of money invested into a property? Again, this is an appraisal question, and this is concerning the income approach to value. Answer is B, the cap rate. The cap rate. Remember, if you take the NOI, the annual net operating income, and divide it by your cap rate, that equals your value. That'll give you the value, right? NOI divided by cap rate equals value. This is part of the income approach to value. Income approach to value. All right, very good. All right. Number 70. What is the unmaking of a contract between parties? It's like hitting the rewind button. We're going to rewind that contract. What's that called? So we're ending a contract. It's in the middle of the contract. We're going to terminate the contract, but it's like we're going to hit the rewind button. That's called rescission. Rescission. So any money that has been exchanged is going to be returned. Okay, gonna rewind it back. Number 71. What is the situation when the original tenant rents the property to a second tenant with the permission of the landlord? That is called subleasing. Yeah, that's a sublease. $72. What is a less expensive alternative often used by lenders to evaluate commercial properties and is usually completed by a licensee? What is that one, you guys? That's a B. That's what we just talked about. That's the broker's price opinion. The broker's price opinion. All right. Number 73. What is a database listing the telephone numbers of individuals and families who have requested that telemarketers not contact them? Do not call me. Oh, I just gave you guys the answer. That is the B, the do not call registry. $74. What is the annual profit generated by a property after subtracting expenses from the income produced? So what do we call that? So we account for all the rent coming in, we subtract for vacancies, we subtract for expenses, and the money left over, what do we call that? That's A. That's the NOI, also called the annual net operating income, NOI. $75. What is an agency representation agreement that was created after a licensee did something on the consumer's behalf without the consumer's permission? And this is a really strange way to create an agency relationship, and I would never suggest you do this in person. So basically, well, you guys pick your answer and then I'll explain it, because it's really strange. I would never do this in real life. This is called D, ratification. Okay. So basically a person with a license, you're working with someone and the person hasn't hired you yet. Okay. So you're not officially their agent, but you take it upon yourselves to do something on their behalf and they're okay with it. And so everybody that's involved in the transaction agrees to kind of pretend like you were their agent all along. It's called ratification. It's crazy, huh? Don't do that in real life, you guys. Unless you were somebody's agent, do not do anything for them. Okay? No. Resneed says, what is estoppel? Resneed, estoppel is another one of those strange concepts where Resneed is kind of like when you as a consumer encourages a real estate agent to do something for them and you haven't officially hired them, but you're kind of encouraging them to work for you. Like you would tell them, Resneed, you know what, if I could find somebody to buy my house for $50,000 cash, I would sell it to them. I really would love it if somebody came around and bought my house for $50,000 cash. And you're saying this to someone that's a real estate agent. So this real estate agent is talking to you about it, and then they go out and actually find you a buyer for $50,000 cash. And they bring you an offer. And you're like, oh, thanks. Thanks for that. I got an offer. Great. I'll take it from here. And they're like, wait a minute. Aren't you going to pay me a commission? I brought you a buyer. And they're like, no, I didn't hire you. But they kind of led you on. right? So if that agent were to sue you, that real estate licensee were to sue you, they would basically, it might be determined that they became your agent through estoppel, where the consumer led them on to make them think that they were going to hire them and they were working for them, but they were never told, no, don't do that. That's what estoppel is. It's kind of an odd concept as well. It's kind of like, if you've ever seen those movies where it's like those romantic comedies where you have this girl that has a crush on a guy, and the guy's really like, he has no interest in her, but he kind of encourages her affection and takes advantage of her to do things for him. But then when she's like, I'm your girlfriend, aren't I? And he's like, no, I didn't ask you to be my girlfriend. You've just been keeping my children all the time and cleaning my house, but I'm not your boyfriend. It's not like that. We're just friends. That's kind of estoppel. Okay. And it's estoppel and ratification are very odd concepts. I had to watch some prep agent videos on those two concepts myself because I didn't quite get it. Just don't ever do it in real life, okay, Resni? Don't ever do that in real life. All right. Number 76. What is the relationship between the availability of a particular product, and the demand for that product has on its price? So what is that relationship there? How do we describe that relationship? What's that called? That's D, supply and demand. Supply and demand. So Joe says, so can we say that ratification, parentheses, agent does something without being asked, and estoppel, the consumer asks for something and the agent, are opposite from one another and they're kind of negative? Yes. Yeah, that's a great way to summarize it, Joe. Yes, ratification, the agent does something without being asked, and that estoppel is like the customer kind of wants something to be done, encourages something to be done. Yes. That's a great way to sum it up. Yeah. They're both negative. Because most real estate laws say that you can't have an agency relationship unless it's in writing, which is going to get rid of both of those. Anthony says, I think of rat, than agent acting like a rat. Whatever helps you remember it. Just don't do them in real life. Hey, if it works for you, Anthony. Number 77. What is a large payment at the end of a loan that pays the remaining principal balance due on the loan? What's that big large payment at the end usually called? That's called that's a balloon payment. That's a balloon payment. And we normally see those at the end of those non-amortized and partially amortized loans. So 78, what is the type of loan in which during the lifetime of the loan, payments are made in installments, but at the end of the loan period, the principal balance must be paid in full with one last large payment to completely pay off the loan? This is this is a partially amortized loan. And guys, really the biggest difference, and I really should rewrite this question to put the difference in here. Partially amortized, the payments are going to be P&I, principal and interest. Whereas fully non-amortized, it's going to be interest only. I really should write that question, rewrite that question to be a little more specific there. Number 79, what is a group of federal laws that protect people from discrimination in housing based on protected classes? That is D, the Federal Fair Housing Acts. That's federal fair housing. Number 80, what is the price the seller sets on the property when placing it on the market? What's that called? That is the A, that's the list price. Number 81, what was the first federal competition law passed which outlawed monopolies to increase economic competitiveness? What was the first one? That was A, the Sherman Antitrust Act of 1890. The Sherman Antitrust Act of 1890. Very good. Rosneet says, I don't remember the dates for B and C. These actually go in this order, Rosneet. This was first, second, and third. I think this one was in 1914, or maybe this was 1914. You don't really need to remember the dates, Resney. Really, for antitrust, just focus on the violations for antitrust. Make sure you know the violations, okay? You're welcome. Number 82. What is an opinion of value based on supportable evidence and approved methods typically required for properties, that should be an S, for properties pledged for collateral for a loan? We're talking about an A, an appraisal. That's an appraisal. '83. What is legislation designed to protect consumers and regulate how companies operate their businesses? Those are A, antitrust laws. Antitrust. Number 84. What is an expression of the ratio between the loan and the contract price or appraised value expressed as a percentage? What's that called? That is A. That's called your loan to value ratio. So what that means, guys, is let's say that you're going to borrow $100,000 for a house. And your lender says, for this loan, we're going to require a 5% down payment. Okay. So your contract price is going to be 100,000. That would be 100%. And the lender says, well, we need a 5% down payment. Okay. So your down payment will be 5%. So you're going to have to come up with your down payment out of pocket. That means the lender is going to give you the remaining 95% as a loan, correct? So the loan to value ratio for your loan is 95%. That's how much the lender is loaning you. Okay, do you guys see how that works? So it's that when lenders discuss loans, they discuss loans in terms of loan to value ratio, LTV. Borrowers, we discuss loans in terms of down payment, right? How much we need out of pocket. That's what loan to value ratio is. Number 85. What is the type of lease in which the lessee pays a base rent plus a percentage of any revenue earned from the business located in the rental space? What type of lease is that? And this is normally used for large anchor stores at the mall. What are we talking about there? That's a D. That's a percentage lease. They pay a base rent plus a percentage of their sales over a certain amount. 86. What is the bank account designated to handle the recurring monthly operating expenses of the company? So this is the bank account that the company is going to use to pay their rent, their light bill, their salaries. That is called the A operating account. A operating account. All right. Number 87. What is a fee? Joe says, is it recommended to have one operating account per business? I would say so, Joe. Well, you know what, Joe? It's really just going to depend on how big your business is. Because Joe, a lot of companies in real estate, what they do, let's say you have a brokerage, Joe, and your brokerage is going to do residential sales, residential property management, and you also want to do commercial sales. Most companies like that, they're going to offer 3 different services, Joe. They usually have 3 different companies, 3 different LLCs. So that if it's to have things separated. So if one company gets sued, the other 2 aren't affected. So it really just depends on how your business is structured and how big your business is. Like Joe, I have separate LLCs. I have my real estate school has an LLC, Martin and Fellows Real Estate School. And then I have a separate LLC for working with Calibri. So it just depends. Like, it's good to keep things separated. 87. What is a fee a lender charges to loan money that is always paid in arrears? That is called A. That's interest. That's interest. Okay. Guys, what is equity? Let's do a little vocab here. What is equity then? Equity is what?
Part of the money paid as principal
Swami.
to the loan.
Okay. Anybody else got an explanation of equity? Okay, so equity is, and Swami, thank you for sharing that. Equity is the difference between what your house is worth, the value of your house, the current value, what you could sell it for right now, minus what you owe on it, any liens you have against it. That is your equity.
Got it, thanks.
You're welcome, Swami. So if you had to put your house on the market today, what it's worth today minus what you owe. Let's say you have an existing loan on it. That's your equity. Okay, very good, guys. What is your origination fee? What is an origination fee? What's an origination fee? Key and Haley, or I'm sorry, Kim. That's Haley and Kim together. Key that Haley and Kim said the fee for the loan. Yeah, the fee charged to process the loan. Yeah, that's the fee for the lender is going to charge you for creating the loan. Very good. All right. Very good, Gary and Joe and Resni, Swami. Very good, thank you. And then what are discount points? What are discount points? Ashley says cash paid up front to lower the interest rate. Yes. Gary says compensation to adjust the yield. Yeah. Very good. So it's basically prepaid interest. You're paying a chunk of your interest up front to get your interest rate reduced for the remainder of the loan. Those are discount points. Very good, you guys. Awesome work. All right. 88. What is a federal act? I almost I got some words missing here. What federal act requires that certain information such as credit reports received by businesses be disposed of in a secure manner? What federal act requires, I'm missing a verb there, requires that certain information such as credit reports received by businesses be disposed of in a secure manner? That is C, the Equal Credit Opportunity Act. Equal Credit Opportunity Act. Oh, what is 89? What is the difference between the current market value and any liens on the property? There we go. We got that, don't we? That's equity. That's equity. And guys, I didn't know that question was around the corner. All right. Number 90. What is a lease that requires the lessee to pay a base rent and utilities plus extra property expenses that normally would be paid by the property owner? What kind of lease is that? And these are typically used in commercial real estate. That is a net lease. That is a net lease. Okay. Now, a gross lease, as I noticed a couple of you guys selected gross lease. Remember, a gross lease, and this is what we typically see in residential. So if you're going to rent an apartment or a house or duplex, anything residential, normally your landlord is just going to charge you base rent. Oops. Charge you your rent, and you have to pay your utilities, right? Utilities. Base rent and utilities. Whereas with a net lease, you're paying base rent and utilities plus an extra expense. And normally when we say extra expenses, it's either property taxes, property insurance, or maintenance on the property. Okay. 91. What is a blanket term used to describe owner financing arrangements in which the buyer cannot secure a traditional home loan from a bank and the seller agrees to handle the mortgage process instead of a financial institution? What do we call that? That is a purchase money mortgage. Purchase money mortgage. It's also referred to as a deed of trust, not a deed of trust. Let me back up. Land contract, owner financing, seller financing, installment contract, contract for deed, any type of owner financing, seller financing, purchase money mortgage, they all go together. Okay. It's not, owner financing is one of those areas that's not well defined. It goes by a lot of different terms. It just depends on what arrangements you have with the owners / seller. So just remember, all of that kind of falls into that category. It's kind of a catch-all for all of that, okay? So purchase money mortgage, land contract, contract for deed, installment contract, rent to own, owner financing, seller financing. It's all in that catch-all. 92, what is the last step in the appraisal process in which the final estimate of value is determined? What do we call this step? Well, the appraiser has gone through and found a value using the 3 approaches to value. The appraiser has 3 different numbers, and now it's time to determine the final estimate of value. What's that called? That's D, reconciliation. Reconciliation. Very good. 93, what is a lease in which the tenant pays a base rent and utilities while the landlord or property owner pays for the building's property taxes, insurance, and maintenance? Okay, read it carefully, you guys. Read it carefully. What is a lease in which the tenant pays a base rent and utilities? This is what the tenant is paying, while the landlord pays the property's building taxes, insurance, and maintenance. So our tenant is only paying base rent and utilities. That is that's a gross lease. All right, just be careful when you read these questions, okay? They can make them tricky. And it sounds easy, right? It sounds simple till you read it again. You're like, oh, wait a minute. 94. What is a type of loan in which payments only cover interest, but nothing is applied towards the principal? And at the end of the loan, the principal balance is due in the form of one large payment. That is a non-amortized loan. That's also called interest only. Interest only. And these are normally, interest only loans normally have high interest rates. Can y'all give me an example of an interest only loan that we've talked about before? Not a HELOC, Ashley. HELOC is a home equity line of credit, and HELOCs have collateral underneath them. You have another example? Construction loans. Yeah, a construction loan is typically a non-amortized loan or interim loan. Because there's no collateral supporting the loan. That's why the interest rate is so high. Whereas with a HELOC, a home equity line of credit, that property is serving as the collateral. Number 95. What is a home loan with an interest rate based on an index and a margin, which causes the interest rate to vary, making payment amounts change throughout the life of the loan? That is called a That's an A, adjustable rate mortgage, or an ARM. An ARM. Number 96. What is the percentage of units in a rental property that are occupied at a particular time? What is that called? B, that's an occupancy rate. An occupancy rate. 97. What is an appraisal method used for newer or special use buildings based on the cost of construction, depreciation, and the value of the land? What is an appraisal method used for newer or special use buildings based on the cost of construction, depreciation, and the value of the land? Guys, that's called the cost approach. Remember, there's 3 approaches to value. There's the cost approach, and this is for newer or special use buildings, where we literally have to calculate how much it would cost to recreate them, how much value they've lost, and the value of the land. That's the cost approach. Sales comparison approach, this is what we use for older residential houses. Okay, older residential. So neighborhoods where the neighborhoods have been there so long and houses resell residential on a regular basis. And then the income approach, this is the last approach to value. That's used when we look at rent, where your rent and expenses determines your value. So that would be in large income producing properties like apartment buildings, shopping centers, strip malls. Make sure you know the 3 different approaches to value, okay? And the differences in them. Number 98. What is the length of time the borrower has to repay the borrowed money back to the lender? How do we describe that? What is the term we use? That is a term. Yeah, 30-year term. 99. What is an individual that hires an agent to represent his or her best interest for a specific task via a written service agreement? What do we call that person? That is called a C, a client. That's a client. All right, and last question. Who is the borrower in a land contract? The person that's borrowing the money. That's the vendee. The borrower is the vendee. The person you're borrowing from is the vendor. The borrower is actually the vendee. All right, guys, good timing. Very good timing. Okay, it is 11:01 and we are done with that vocab exam. Woo! Awesome. So when we come back, we're going to take our break for an hour. When we return, we're going to play Kahoot, the vocabulary game Kahoot. It's going to be a lot of fun. It's a great review for those of you who need to work on your vocabulary. Okay, guys?
Thanks, Amanda.
You're welcome, Swami. It's good to see you again. Ashley says, I thought the cost approach was used in cases of replacement. Yeah, it's also used, actually, that's a good point. Cost approach is also used for, well, the replacement Ashley, the replacement, what you're talking about, replacement value, that is a way to determine the cost of the improvements in the cost approach. Okay? So it could be the replacement method or the reproduction method. The reg says, do these videos get posted to watch again if needed? Yes, I do repost these videos. They are in my SharePoint drive. And if you send an email to me, it's alinstructor at Colibri Real Estate. ColibriRealestate.com. alinstructor at ColibriRealestate.com. Send an email to me, Narek, and I'll be happy to send the link to you. Okay. So gender, you said number 97 is wrong. You printed the vocab questions. Are you talking on the PDF that I posted to gender? Okay, thank you for telling me that. I will take a look at that, okay? I'm glad you pointed that out to me. Let me take a screenshot of your comment. I'll take a look at it, okay? Gary says, where's the PDF posted? Gary, I had posted it in the chat, but here it is again. Okay. There you go. And now I'm going to double check number 97. You're welcome. All right, you guys, I'll see you in an hour and we're going to play Kahoot. Okie dokie. Thank you. Bye.